Here are 3 stocks I'm buying in March 2025 due to the stock market dip. For those that don't know, my name is Connor, the founder of Yellowbrick Investing, and we track thousands of stock pitches from professional fund letters, blog posts, analyst reports, etc. And then we track the returns of those stock pitches to identify the best investors and those who are worth paying attention to. As you know, the market is down over 3% so far this year, with many stocks being down more than 10 or 20%. And so there's been quite a bit of buying going on. Here are 3 stocks I think are pretty interesting to buy during this dip. Starting with number 1, Finance of Americas Corporation, which was pitched by Pernaz Research. They're about a $200 million market cap company and the leading reverse mortgage player in the United States. Even with the crazy rate volatility last year, they still were able to grow their reverse mortgage originations by 19% in 2024. Even with that growth and positive net income, they're still trading at only a 0.57x price to book ratio. The 2 main benefits here are the demographic tailwinds, with 10,000 baby boomers retiring each day who might want to take some equity out of their homes, and the increased regulation in the industry, which actually benefits the bigger players because now it's harder and more expensive for new entrants into the market. Number 2 is Quest Resource Holding Corporation, which is a waste management servicer for Fortune 1000 companies. They are currently significantly undervalued at only an 8x EV/EBITDA multiple compared to about 15x for peers. However, there are 3 catalysts that could lead to a re-rating and a huge stock price increase. The first catalyst is that they've significantly increased their growth, going from about 1 new large client win per quarter to double that in 2024. The second catalyst is that they have really stable revenue because they signed 3-year contracts with most of their clients, and it can take a little while for those contracts to start to ramp up, which means that all of those 2024 wins will continue to see enter into their earnings over these next few quarters. The third catalyst is that they've shifted from a growth at all cost model to focus on more profitable clients. So they've shed a lot of their unprofitable clients, and their gross margins have improved because of this. They are also implementing a bunch of cost cuts and efficiencies through automation that will start to appear in 2025. Lastly, we have Chart Industries, which is down about 40% from its all-time highs, and its PE ratio is about 12 right now compared to its historical average of 20. They engineer and manufacture process technologies and equipment for gas and liquid molecules, and this is basically just a play on them re-rating. Both JP Morgan and Barclays project a $14.88 2026 EPS, which could be a 50% to 100% price increase just based on whether the PE ratio stays at the 12x it's at right now or goes back up to its historical average of 20x. They're still growing really well with a 14% revenue growth, 19% EBITDA growth, and 44% free cash flow growth. So this is just your basic value play. We have all of the best stock pitches due to Yellowbrick's data, so be sure to give us a follow for more stock pitches in the future.